all you devils. Happy Friday. Here we are, let's see, about 12:30 on June 2nd. We're going to dive right into Bitcoin. Now, I'm going to change the format here a little bit. A couple of reasons for that. With a little bit of input from some marketing people. Suggestion being that combining 4, 5, 6 assets into one video, not as appealing to the viewer. So I'm going to go back to what I used to do, which was just one asset, one video. So more content coming, but to make it easier for any viewer, whether it's members or subscribers, to focus on whatever asset interests them. You'll find the approach will be virtually identical. It doesn't matter what the asset is. Now, I'm going to use that as my segue into a little bit of a change of format of what you're going to see today. So I've been alluding to this. I've been doing it without really emphasizing it. I'm going to start to do it this way. I like this format here. So I'm going to have an Elliott count over here, and then I'm going to have a market structure over here, and we'll look at different time frames here. And I do that for a couple of reasons. One, and I've alluded to this many times, I think, over the last year or so, the market for technical analysis education is changing, right? I mean, things change. I think right now, I would have to say, if you look across the space of technical analysis, as I'm sure many of you do, we're to the point to where market structure or smart money concepts, while these concepts are not necessarily new, I have got to give huge props to, I think his name is Michael Hudgens. I get him confused with the former lead singer of NXS. This guy has had such a dramatic influence on technical analysis that I got to put him in the categories with some of the greats, some of the most influential technical analysis educators around. Excuse me. He goes by the handle of ICT, the Inner Circle Trader. Virtually dominates TA. So I don't want to be stubborn about what we're teaching, and what I'm going to demonstrate to you today is how beautifully it fits in with Elliott Wave. So I don't want it to complicate the analysis. I want to show you how it dovetails into everything that we've already been doing and teaching, and the methodology to which I was trained in, which is what I've been teaching here for the last 5 years. But I've started to adapt this more into what we're doing, and in a large part, I'm just working on it will be a featured point of the brown belt, but it's just a new course content that I've been working on for a while, right? These things take time. So it's very much in my mind, and very much, I think we can demonstrate here how it can be very useful. Now, the other thing, and this is just a side note here for those of you that, anyone who's watched any of my videos know that I suffer severely from allergies here in Austin. And I've talked about this before. I was never allergic to anything. I'm almost 62 until I moved to Austin. Now it's more than an annoyance. It's literally a disease. It's something I have to deal with every day. It used to be not so bad when we weren't doing the camera, because I could just mute, edit, do it. Now everything, we're all on camera. I can't do it, right? So the live streams have been plagued with it. And I think for any of you that have suffered through some of my live streams, I'd like to think the content was decent. But someone drew my attention to it earlier in the week, that I keep muting the mic because I have to constantly, post-nasal drip. I have to do this all the time. I had the wrong mic set up with this camera, so I'm doing, and it's coming right through because I had. When you use OBS for live streams, you got 6 mics to pick from, and apparently, anyway, I think we have that sorted out. So any future viewings of live streams from me will not be so annoying of me clearing my voice. Okay, so moving on, I got a little TDU bling here, right? So this merch, right, will be, I was kind of showcasing the first one we've got here. This is the prototype, but we'll have a bunch more coming. There's enough interest in it, so I think that should hit the website, and we'll have them featured on the videos. So if you wanted to pick up some TradeDevils merch, right, it'll be available to you. Okay, with all that said, let's talk about Bitcoin. Well, before we get into it here, one thing about this hat is I have to keep the mic off to the side. One thing we can certainly say as we look at what's happening across the equity markets and just the markets in general is that the long hoped for decoupling of Bitcoin with other risk assets is fully in flight. We've got the stock indexes, just risk assets. What's the Dow up? Six, almost 700 today, and Bitcoin is sleeping. If you're a bull, that's not necessarily a good thing. It may not be a bad thing, right? Because we all wanted that decoupling when the market was going down. Oh, damn it! When is Bitcoin going to decouple from risk assets? Well, here we are. Right? So market's flying, Bitcoin's going nowhere. For a bull, that's not great news. So let's stay traditional. So the first thing I'm going to look at here is the Elliott Wave on where we sit, as I interpret it, because I think this is. We can make an educated guesstimate as to what we have here, but I don't think you have any clear conviction in the count. Excuse me, here I am doing it again. Okay, so I think that worked. Now, we looked at this earlier in the week on the last live stream. I had, I think, I had a couple of senseis and a skilled member giving me their counts. I don't think we have enough here where we can be definitive about what this is. It could be a 3, it could be a 1. It could be a C, actually, right? This could be ABC. It's so irregularly shaped here, and we've got triangles on both sides of it. I mean, you don't damn near make a case for just an old school head and shoulders there. You can't be clear about it. You can't be definitive. Now, what I think we likely can all agree, although I've seen alternate counts, right? So because it's confusing, or I should say it this way, because it's not clear as to what we have here, again, this is the knock on Elliott Wave. You probably put 10 Elliottians in a room, you're going to get 10 different counts here. I am of the view that this completes, right? That we complete an impulse here. All the ingredients are there, and given the depth of the retracement, my view, and I've seen counts that have this 3, 4, 5. I've seen variations on this. I think this is more probably a completed impulse here, which would give us a 1 wave off of this low, right? Assuming a bull count. Correction, it almost doesn't matter, right? It's 3, it's correction, it's technical. Again, we've looked at this a gazillion times, right? It's right to a golden zone. Right to a golden zone, right? So we know the algo used it. All right, so, damn it. As I said, I'm shopping across the country for new places to live. In fact, 1 month from now, we're going down to Asheville, North Carolina to see what it's like down there. I heard that's good things about it and much better for people that suffer from allergies. So next month, I'll be gone for a few days. Back to the point here. Let's look at Bitcoin. 1, 2. Well, you wanted this to be 3. You want 4, 5, and it still may be. Although this wave here, that's not the 3 you hope for, right? So if gun to my head, I had to label this, I'm more inclined to think it's 1, 2, 1, 2, because I also think we're heading deeper. Well, at the very least, we're heading towards the 50 here. I say that, nobody's certain. I don't know. Market can do whatever it wants, right? But per the Elliott count, as I look at it here, I think it's more probable we're coming down here to 25, potentially even lower. 24, 25. We've talked about this range for the last, I don't know, when we put this in. April. Excuse me. There I am again. So what is it? What is it? I could put a 1 here, but it could just as easily change. So I leave this undeclared. Now, coming down, I think we can actually get a better handle. Well, again, it's all the market is able to do, right? We have a swing, we have a retrace. Now, do we stay internal? We go external. Right now, it appears to me we're headed down into this range here, and I'm being influenced by the Elliott count. But also, when we look at the market structure, I think you'll find that there'll be some suggestion that that's the more probable path. Again, probable, not certainty. 1, 2, 1. Well, can we get a 2 in here? Well, let's tee it up here. I think we can work with this here. Oh shit, didn't want to go that far. most probably a 5. 1, 2. Yeah, you can do it. 1, 2, 3, 4. Terrible little finish in the 5th. But giving what comes off of that, okay, looks like an A, triangle B, and then I'm coming down here and I finish with a C. I get an, yes, I do. I get an impulse. It's a little wonky here, but you don't overlap. So 1, 2, 3, 4, 5, right? I've got an ABC that completes. Well, that's not what I was looking for as a bull. 1, 2, 1, 2. I don't think so. We get a W. I go sideways, which is certainly if this was 1, 2, and we were going to go off into the 3, that's not the launch point. That's not the kind of price action you'd be looking for. Right now, things can change, but right now, that's not a great looking start to anything other than more consolidation. So if we dig in there a little bit, what we don't have a lot to work with here. Okay, I'll get you out of here. Maybe okay if this completes what, so your thought would be if it's not going to be 1, 2 and off we go, what are the alternates here? Well, it looks to me like we've got to go A, B, and then I do get an impulse here. So I think we've got to work it this way. A, well, this is chop zone, B, C, right? So that gives us the X right here. A, B, C, right? Impulse here works it. It's not the prettiest impulse, but it is valid. 1, 2, 3, 4. It's a little skinny in here in the 3, 4, but you can do it, right? It's not a horrible Elliott shuffle. It's not great, but it's doable, right? So you can get that X in. Okay, so what is the single most probable location for an X wave? If assuming this is where what we pull from for the beginning of the C wave. Most probable location for that X. Excuse me. 618, right? But when we just go a little bit beyond it, so we get golden zone. So we've got just, per Elliott textbook, right? You can't, I mean, it's right out of a textbook. You can't script it any better. Okay, so if this is going to go A, triangle B, C, that gives me a W, A, B, C, X. Well, if you were unsure, that might give you a little bit more conviction in planting that X right there. Okay, well, what does that mean? Well, it means I've got a target down here, right? I know I don't have to wonder about it. I know there's an algo positioned right there. It's going to stay short for that target, and it's not going to reverse, or pardon me. It doesn't reverse is the wrong word. It's going to be stopped out on the other side of the 65, right? So as we look here, does that make sense per the Elliott count? Well, I think perhaps yes. Let me dig in there a little bit. Your first thought would be, oh, can I get an A? Well, yeah, you do get an A, but it's a little bit. Okay, 1, 2. Let's. Now we can see it here. 1, 2. Now I get a 1, 2, 3, 4, 5. Perfect 3, 4, 5. Right now, oh shit, let's go to a 2 here. You see this a little bit better. Trying to keep them on the 4. 1, 2. Look at the perfect little impulse I get here to give me that 5 of the 3. 1, 2, 3, 4. Not much of a 5, right? So I don't want to connect the two because I get a completed impulse here, and I don't think you want to. It's too much of an Elliott shuffle, and plus it's a 3, right? So if I was trying to use this to finish it, it doesn't fly. So what I think is more probable here is that we've got an A expanding the B, and that we're going to go a little higher for the C. Right, because our expectation would be if this is the A here, right, looking for a reasonable location for that B. Well, okay, let's just standard ops, right? Standard Elliott ops. Now remember, I'm going to pull here. I'm going to use I've got my Elliott hat on right now, so I'm going to pull from the completion of the A, B. I'd be looking for that C. Well, minimum target would be up in this range. Now, do I have a 1, 2? I'm looking for a C, so if it's going to be A, B, I'm looking for a 5 to complete. Now, nothing says we go right in the pocket here. We could go higher. So what I'd be after here is, okay, is that the one? Hard to call it. 1, 2, 3, 4, 5, something like that. That would give us the B, because what we're trying to do is get an A, B, C to finish to give us, let's go back here, to give us the Y, right? So if this is going to hold as the X, oh shit, I got too much on here. Let's get that out of there. Okay, if that's going to hold as our X, then I got an A, B. I'm looking for the C to come down here, right? So over here, give me that C, that gives me the Y, that gives me a candidate for either a 2 or a 4. Now, I should have a question mark here, because that takes us back to where we started, which is, right, is this a 1 or is this a 3, right? If it's a 4, right, we can, let me go back to a 4 hour here. We can hang on to the idea, or let me rephrase that. We can't eliminate the possibility that this is 1, 2, 3 until we overlap this 1. Then we know. Then we can say with certainty that it's not 1, 2, 3. We know it's 1, 2, likely 1, 2. So in some respects, I'm kind of pulling. I'd rather see it come down here, because then it clears it up for me. I know I'm in a 1, 2. It's actually more bullish. If it's 1, 2, 1, 2, oh, I got a couple of very big 3s that are in my future. So 1, 2, 1, 2. Well, if I'm going to get there via WXY, yeah, I almost don't care where I come in. If it's 50, fine. If it's golden zone, fine. And I don't want it going much below that. But right into the pocket here, so if I draw it, it would be WX. Now, where do we finish here, right? Well, that's going to be a function of what we get here. We can start doing some reasonable projections. But anywhere down in this space is going to set me up for, I'm going to hide that. Let's just push it up here, since we don't know. 1, 2, 1, 2, boom. Right? I'm very interested down here. Again, I've been talking about this for the last almost 2 months, as 24, 25 being just the ideal location per an Elliott count. If we look right there, now I'm pulling off of this, which is non-traditional. If it's 1, 2, 1, 2, no problem. If it's 1, 2, 3, and we're coming down for the 4, well, I'd be pulling 2. I'd be looking for this a little bit higher. But because I know the algo used this, I'm gonna work with it until this breaks. If it breaks, then I'm gonna go back. I'm gonna go back to the low. If it breaks, all right. But until that, I think we'd leave it right here. Look how beautifully that sets up. So our invalidation point is right here in the 50. It's also the last break of structure that we got, right? So we'll get to that in a second. So WXABC into a Y. Where are we going, right? How far are we going? Well, first, right, we don't know that we're coming down here, but it sure looks like we've got the ingredients for this to come a little bit lower. And then I actually would prefer to see that, as I just said, because then it clarifies where we are. Then we know, oh shit, it's a 2. Okay, well, coming off of that, right, we can start to be putting together some trade plans after this. It's been a long wait to get something really juicy and tradable. I mean, it's for a longer term swing trader. You trade the short term stuff all day, every day. 1, 2, 1, 2, right? Golden zone would be nice. But this, what a cluster. That's my. Well, you'd want to have multiple counts, right? So in a way, I'm giving you multiple counts. 1, 2, 3, 4. 1, 2, 1, 2. What I didn't do is put together an ABC, and I don't think we need to do that just yet. All right, and if this low is broken, then things change. Okay, until then, let's get. I think I got everything here I wanted to look at. I think that's all I got. Okay, so let's go. Oh, I should mention this here, because I did this deliberately. This is, of course, everything that I view here in crypto is on BitGet. They sponsor the channel. They sponsor us. We recommend them. We trade there all the time. Their link is directly underneath. We give you there's a kicker, some bonuses if you're looking for an exchange. If you open an account there and fund it and start doing some trading, I think you'll like them too. Now, if you're in the States, it's a bit of an issue, just like so many of them. But if you're outside of the States, it's one of the very best for futures trading in crypto. That's why we like them. And when we establish that relationship, U.S. traders had access to it. Since then, you know, the U.S. is doing pretty much everything it can to drive all the crypto exchanges out of the U.S. So nothing we can control, so we just adapt. Okay, all right, so there's, I think, a pretty good Elliott analysis of this. So now I'm going to go over to BitGet on the spot here, where we're going to use the market structure. So let's start with the 4 hour. Now, and then we'll look at combining the two, and we'll wrap it there. Okay, so if any of you that are either members or your subs here, if you're not familiar with market structure and smart money concepts, right, it's kind of a marketing label, but it's effective, right? We can't say it hasn't been effective. Excuse me, hang on. Hopefully that's not coming through. Well, as we look at the market structure here, if you're unfamiliar with it, I'm going to put a link directly underneath this video. We've got a lot of new members recently, and you're coming in saying, okay, I want to learn some Elliott Wave. And all of a sudden you're talking about market structure. Well, again, you can't, they play so well together. It wouldn't disrupt your Elliott Wave analysis to be including a little market structure. And in many ways, when you hit areas like, well, let's just use this. When you hit areas like this, where there really is there a count there? Well, you know, what I find after so many years of doing this is that often Elliott kind of it's almost like a what do I want to use here? Like a signal from a fuck, I can't think of the wording I'm looking for, but it's like if you were dialing on your knob and like, shit, you got nothing but static, and then all of a sudden, oh shit, I got something that locks in. You get perfect sound. It's often, I think it's like that, where it's like static, and then oh shit, out of that static comes a perfect impulse. So the Elliott, it'll kind of hide and then it'll show up. Now again, Elliotticians can label anything, right? There's always, it's one of the things that really are remarkable about the genius of Elliott is that there's nothing you can't count somehow. Right now, you got to fudge a little here and there. You got to, there's, I call it an Elliott shuffle. There are times where, you can't get a perfect 5 every time out of every impulse, or there are times where you've got to go with the implied swing structure or the count per what you can work with. But I think it tends to do that, where, again, if you just brought up this chart and you were looking right here at this section, right? Is there a clear Elliott count there? No, there's not. But come back. Right here, all of a sudden, I got all this schlop, and then, out of it, all of a sudden, comes an impulse. Oh, where are you? Where, shit, it's like, boom, impulse. Right? Nothing, noise, impulse. That is how I have always interpreted Elliott, right? It's not there, boom, it's there. So as we sit here looking at this, okay, is there Elliott here? Yeah, as I said, we just counted it. But, right, what have I got here? Is that 1, 2? Is this 1, 2? At this distance, 3, 4, oh, okay, great. Well, then you dig a little deeper. As we just went through, it doesn't quite play ball. It's just not quite as good. So in those circumstances, the reason I take you through that little story content is that when we don't have clear Elliott, the market structure is very infinitely usable. Okay, let's open it up here and see what we've got. So things that we can see with certainty. Now, part of the appeal to market structure or smart money concept it's very black and white as to where's the last break of structure, where are the last changes of character. Again, if you're unfamiliar with this, I'm going to put a link underneath this video that'll go to some training I did that was specific to SMC and crypto and some other spaces. I'll put that link in the description underneath this if you haven't seen it. It's been in our playlist forever, but it can be hard to find it. So I will put that link in the top of the description here for this. So if you needed to review it, although I swear to God, if you went to YouTube and typed in SMC, no less than 3,000 educators are going to come up. They all seem to be Brits between 25 and 35 teaching you SMC on FX, but it's equally as effective, and asset doesn't matter, right? You want some decent volume. Okay, so what do I have here? Well, I've got a swing range, right? That we can be objective about. Right? It's part of the attraction to market structure. Here's the last break of structure that gives me this high. So I have a range now between this high here, the strong high, and this swing low. This without going through a whole training on it, right? So the idea being that actually the last low down here is the last low that, as it's said in SMC speak, that did its job, that gave me a break of structure. Well, I've got some change of character here. Again, if you're not familiar with this, some of this language would be like, what the fuck is he talking about? It's not that complicated once you apply yourself a little bit to it. So, okay, I've got a range. So if I look at it now, here's the range. I've got this low to this high. This is the range I'm in, right? Because we got a little change of character here, but it's not a break of structure. So the structure swing that I'm working in is from this low to this high. But this is the concept being that this would be the protected high, because this is the high that drove that made the change, right? So we went break of structure, then all of a sudden I've got all this lower, and here's the last low I've got. So as I look at this range here, now let me make a point of noting here that I'm using the Sonar Labs indicator suite here. Now we work closely with them. We have a little deal with them. So if you use our link, well, you'd be doing it for, what do we make, $5? They're very reasonably priced. As many of you know, you could do this yourself, right? You could mark these breaks of structure, change of character. You can mark it off yourself. It's a luxury to have a piece of software do it. Now, it's not without some expense, but it's very reasonably priced. And I think it's a 2-week trial, right? So there's plenty of time to say, well, is this adding enough value to what I'm doing? So I mentioned that, so if you wanted to take advantage of it and trial it, it's in our link tree, which is underneath this video. All right, I'm usually not a heavy promoter, but every now and then I got to do it. Okay, so I think if you're interested in this, it'll help you. But it's just like Elliott Wave. It's like letting a piece of software do the Elliott count for you. Before you do that, better to be able to do it yourself. Anyway, that's why we don't use some of the auto wave count. Oh, shit, I think TradingView has it now. That's why we don't use that when we're teaching, because I want you to be able to do it yourself first. Then, for efficiency's sake, if you want to use a piece of software to maybe do some of the detail, would make sense. It's kind of the same thing here with market structure. There's several products out there on the market. We like them, think it's the most reasonably priced, and it's very cutting edge. Oh, what's happening there? I got a little... My hard drive's getting a little full. Okay. All right. So here's the swing range. We just drew that here. So here's the current swing low. Here's the strong high because it did all this. So as this, come on. I literally think I may just have too much open. Here, I can edit that. Let me pause. So after this, after we drive down here and break some of the structure, the anticipation is that we would have a retrace here. And I'm not going to, there's a little more nuance to that, but just for the sake of, without trying to do a full lesson here, we've got, now some might call that a break of structure, right? A change of character because the true pivot is lower, but it's significant because this low here gave us a break of structure here, although it's not the lowest low. Doesn't matter here. So I've got a change of character here. You'd anticipate a retrace. Well, if we're thinking about a retrace here with our market structure hats on, we want to be looking for that in the discount. So, pardon me, in the premium zone, which would be if I do it this way, right? So here's 50% of the range, right? Which is, again, that's Sonar Labs indicator doing that. Of course, you could draw it, right? So what is, we just looked at this in an Elliott count. Oh, come here, right? So if I'm pulling from this pivot, what do we know, right? We know we've got a golden zone here, but we're also at 50 of the swing range, making this all that more interesting of a pivot. There's also, there's a little supply zone in there. No, there's a little fair value. It actually looks like it's right here. That looks like it gets it right there, right? So just a touch, we just barely get in there to mitigate this pivot and get to the premium zone. So a nice sell. No, I didn't take that. I'm not shorting it. I'm just kind of demonstrating the technique. That would have been a reasonable place to be looking for a short. So here again, we're back on spot here. So what would be the implication? Well, you could think the same way as a measured move. You think the same thing, right? Oh, okay. Well, I've tagged a 50. Where's the target? 24.5. What is the range that we've been talking about? 24 to 25. Okay, that's not insignificant. Now, also note here again, you don't have to forego the measured move or geometry just because you don't have your Elliott Wave hat on. Dominant to dominant, retrace 50 to the tick. Well, is there anybody confused about what's it got? Doesn't mean we can't break, but if we're gonna break this low, probable location would be here, which sets us all back up to now. Put your Elliott hat back on. A, B, C, W, X, Y. Right? It starts to come together. And you can see, okay, I've got a roadmap here that might lead me to the next time to be looking to be a buyer of spot. Well, it could be whatever. All right, so, okay, right now you look here and you go, oh, fuck, man, we just went through that. Do I have to go back in there again? Because it doesn't really look like a very good impulse, does it? It's got too many legs on it. So now you're going, oh, fuck, is this the 5? Is this the 3? So some of that gets removed when it's not clear. Now, if this were drop dead straightforward, right, and we still could get that, right? If we got something like that, well, then I'm not, okay, I can't not see 5s and 3s, right? If you've studied Elliott Wave, after a while, when it's in your face, you can't turn your brain off. You're going to see it. Oh, impulse. Is that an impulse, right? It's really tempting to go, oh, fuck. Is it? It's not a good looking one, right? As I said, from the static, right? I want to see this. Right? That's not what I got there. Now, if I'm applying market structure, do I care? No. I don't. I don't care. What do I know here? Well, a couple of things I know here. The fact that they didn't get this low is telling, right? That's a sign of strength. Because what's down here? Liquidity, right? The fact that they don't get there is surprising. I got a clear swing range here. I know, right, what just happened here. Now, if I got a target. The target is this low and below. So if you're like, oh shit, okay, well great, thanks for telling me all this now. Well, would you want to be a seller now? Perhaps not, right? Ideally, it's like anything, right? We can't always get ideal. Ideally, you want to be selling in the premium above 50% of the range. Well, so now we're not in 50% of the range, right? If anything, we're in the discount zone where you might be looking to be a buyer. Well, does the count support the idea of being a buyer? Right now, again, you don't have to turn your Elliott hat off, right? Remember, we're expecting that B to go higher. Does that jive with what I see over here? Right? Does that jive? Whoa, jive. What the fuck? What am I, a jazz musician? Well, so here I'm down here going, okay, well, wait a minute. I've got a swing retrace. I've come right to the POC here. You can see some of these demand zones here are kicking, right? The market's come down, tagged it. Now we leave behind one here. So if I dig in there. When the Elliott's not clear, because is that clear? Well, I see that I got an impulse here, but then I go back into static. I'm all over the place today. So what do I have here, right? Well, I can see I'm sitting in a supply zone here. I got pretty strong demand. Do I want to be a buyer? Well, I mean, you'd be buying in the discount. Am I going to get a 3 here? Take me up back towards some of the supply that's up here. I've got imbalances along the way. I got the POC right here, right? That's just giving you again, this is Sonar Labs, giving you it's just built into the indicator. It's giving you the volume profile of the current swing structure, right? Some of the swing high to swing low. Well, there's the volume profile. Unlike if I just I could draw it, but if I have just visible range, it's not going to focus on just that swing range. Again, this is the advantage of a tool like Sonar Labs market structure. Okay, well here's the discount. Now am I going to come all the way back up and get into that discount again? Well, I've had a little bit of a retrace here. If we dig in there, Jesus, this is going to be a short video here. So here's the pivot here. So I've had a little change of character here, right? I've had a little, that's me drawing it in just to show you, right? You can draw these in yourself. You don't have to use software. Okay, a little, oh, all of a sudden, it's lower low, lower high. Oh, I broke a high. Get it right back on there. I broke a high. Oh, that's a change of character. We were doing lower lows and lower highs. All of a sudden, I got a higher high. Potentially, now we don't know because we're inside the range, I've got a higher low. Well, if that kicks a little higher, higher high, right? Now I potentially would have, if I go to a smaller time frame, I'd have a new swing zone. I'd have a new swing zone. Right now, look up a bit. Look at the big imbalance I have here, right? So this is an area of interest. So, all right, if we come back up here, right, this would be, if I draw it out here, this would be an area of interest. Now, I've got imbalance here. That's all it's telling me, right? You see it all the time in the market, right? But you want to pay attention here because the market moves so quickly. Shit, my hat's hitting. The market moves so quickly here. Could there be unfilled orders here? Not an unreasonable thought. If I get through this, well, then I'm coming right into a supply zone here, right? Last ups. This is an up to down, right? And it's all the more significant because it led to this massive imbalance, right? So that I'd tie a little bit more weight on that, but then I got another big one up here. So if we're going to pop here, again, just because we're switching to market structure, it's not like, oh shit, well now this is going to be easy where you're going to do nothing but make money. There's the same kind of, ambiguity at times to where you've got to make a decision, right? And so what you're after is, can I position myself into the first, right? Can I get into can I be a seller and the premium buyer in the discount? And can I position myself for a risk reward that warrants the risk, right? Is the reward potential strong enough? Well, if I'm selling up here and I've got a target down here, I mean, do I need to even pull that, right? I mean, if I'm selling up here with a stop over that pivot, well, shit. I mean, let's just say you're going to be in the discount. I don't need to give that a lot. I got a target down here. 13 to 1, 13 plus to 1. All right. So if we come back up here now, what if you get here? Well, here and this is like 50-year golden zone, right? Maybe you take a piece here on the anticipation that they're going to come a little bit higher, and this may be just a little bit of inducement here to get people early to sell early, and then now we come up to the true supply, right? So again, there's always going to be that ambiguity of shit. Is it this one? Is it this one? Which one do I use? Is it the supply zone? Is it the fair value gap? Is it the discount? Is it the pivot? Is it the, right? You're still going to have those challenges, right? There is no, I always tell people, people love to claim that making money in the markets, that's easy money. This is by far the hardest easy money you'll ever make. Oh, hang on. My disease kicks again. All right, let me get this out. I got to get done here. I'm trying to make a short video here. I'm making a long video. The other thing here, let's not abandon just basic geometry. No reason to do that. Okay. Oh, we didn't get all of a sudden, right? So here we're holding within this range. Hit some demand here. Pop. Well, I got a little change of character. I'm right at the 200. That's the God EMA. The God MA, right? SMA, EMA. I got a little structure down here. Okay. Can I trade this? Well, I just banged the 50. See, it all kind of fits in together, right? It's just another way to view the market. And as I've kind of alluded here today, I've tried to, when the Elliott's unclear, you can still trade it. You can still analyze it. You can still put a game plan together, assuming you want to trade it, right? I mean, if the Elliott's not clear, do you want to trade it? Well, if you're a hardcore Elliottian, maybe not. If you're using Elliott, as I suggested, when it's effective, when it's adding value to your analysis, when it's useful to you, by all means. If it's not there and it's not clear, like this is definitely not clear. That's not clear. I don't know what the fuck that is, right? It's just a bunch of backwash. This is what that is. Shh. It's static. And then out of this static, boom, impulse. Is this an impulse? It's moving impulsively, as in we're getting a pretty dramatic range expansion here. Is it a pretty impulse? No. Okay. Do you need to use the Elliott here? Do you want to use the Elliott here? Maybe I don't need it. Let me finish here before I Jesus. So much for a short video. Now here, as I've got this mapped out, let's just take all that work we did and let's just drop in the market structure. Right, this is ultimately where I was trying to get. Oh, let's take this off since we don't need it, since I have my range here. Okay, so given this range now, let's dig in there a little bit further. Oh, and open it up here. See how this all plays together. Here's a swing high. I'm on a 4-hour now. Swing high, swing low. Right, remember when we went through this with an Elliott count, looks like an A is done, A, B, C. So we'd be looking for that C right in line with this high volume node where I have a supply zone here and then a fair value gap. And again, software is doing that. You could do the same thing, just draw it yourself once you have a little knowledge of this. It's not terribly complicated. It's just like anything, it takes a little practice. Takes some screen time to get a view. Okay, why? Okay, and that did what? And where's the? Right, it takes a little time. That video that I'm going to link underneath would be a head start if you haven't run into it across YouTube already, which would be shocking if you hadn't. Okay, so A, B, I get the B right into the supply zone. I'm looking for a C right down here at, well, I've got two targets. I've got the 50, right, which is right, we know it's that pivot high here. So we have that target, and then we have the swing low as the target because this is the swing high, this is the swing low. Now on the 4-hour, since I've had an internal push here, this is the swing high, this is the strong low. So we're anticipating, we were looking on the 1 hour, we were anticipating that this low is going to get challenged or at least come down here for a swing at the liquidity that's sitting underneath these pivots. So if that comes down and breaks, just because it's the strong high, or excuse me, the strong low on at this degree doesn't mean it can't break, right? So we'd be looking for A, B to come down, break this low, which would be a break of structure, and then give us a dip into the liquidity of stops that we know are down here. All right, so if I take this back to a 60, all right, then you'll see where we were. Oh, come on. There we go. Okay, so now we look here. Here's the swing low, and the strong high is up here, right? So it'll change based on the swing structure as you change time frames here, which is why there's advantage in doing it this way. Right, having multiple time frames. Let's come back here. God, I'm trying to finish this video. Okay, now we come to the 60. Okay, A. We're looking for the B up here. Again, we just drew those. Just same thing. They wouldn't go away here. You're just doing it a little bit differently. So I do it like that. So A, B. Is that 1, 2? C up here where I've got supply. You get you got two of them here. Right. You got an entire zone up here. Really. A, B, C, and then, oh shit, you probably just bring in a little swing structure here in terms of projection of location. Well, here would be 200% the length of the A projected from the expanded B. Right? So again, it's not like you turn your brain off if you as you're combining styles, right? You don't go, oh well, shit, maybe I don't need to do that. Well, anything, right? Anything to give you more conviction and confluence at a decision point. Well, is there supply up here? Yeah, there's supply up here. Do I have a fair value gap? Yeah, I do. I got demand down here, right? So potentially you've got the little push ready to go. So there's absolutely no reason why you couldn't be looking to get long here up with that as a target. Now, you're likely going to want to trade futures, maybe a little leverage, right? Very clear locations for your stop. You don't have to use that pivot low. Shit, you can use this pivot low, right? Depends on your risk tolerance. This could be the last push before but now we don't have it, right? You might want to see this get broken. All right, so I get higher high, higher low, higher high. All right, now reasonable target up here where I know I have supply. All right, you want to be a little more aggressive. You'd have another one up here. Just refinement into that wick. Okay, if it's not going to be here, something changing. Oh, all of a sudden, is that 1, 2, 3? Well, now you're going to have to rethink all of this again. Right? It's just the nature of the beast, right? If the market changes, we adapt with it. Right now, you're coming out of demand, pushing up towards supply that would play ball with the Elliott count per the way we're viewing it here, setting up what would be the push from here to here. All right, guys, I got to stop talking. I probably lost most of you an hour ago. All right, trying to consolidate these, but since this is the first time we're really going through how to combine these two, it'll get more consolidated next time. All right, so there you go, something to chew on. Hopefully this is of interest to you, and you can see the potential of how they play ball together. And again, I will, if you're not familiar with it, as a member or whomever, YouTube sub here, I'll put a link to some of that training that we did that takes you through the basic foundation of the theory behind it. Okay, guys, with that, I got to stop. Holy shit, this went way longer than I thought. Thanks for hanging out with me. We'll see you over here next Wednesday. Next Wednesday, we'll do a live stream with some member chosen assets here, and we'll see if we can continue to make this combination. Okay, guys, have a good weekend. Talk to you next week.